Hello, this is a tradesight market review and trade recap from Wednesday, May 8th, 2013. I wanted to walk you through two things at once. I wanted to talk about the futures today and the action in the market and how our market directional tool kept us focused on one direction in the market. And then I wanted to walk you through a trade call we made in the stocks during the session. And this is all, this is the E-signal 11 chart with our market directional tool on it. And basically, this is about 40 minutes into trading. So this dashed line here is the start of the new trading session for May 8th. That was a Wednesday. And you can see we opened down just a tick, and a couple ticks, and we like to expect that gaps will fill, especially small gaps. So we kind of headed up here early. Now, you can see three green lines right here, and these lines are our market directional tool. What they do is they give us an idea of whether we should be looking for shorts or long ideas in the market. When you're above all three lines are green, everything's good, you should be looking at long ideas. When they're below all three lines would be red, you'd be looking at short ideas. If you're kind of in that middle area, you're either above 2 or below 2, and that again is market directional. If 2 of them are green, you're above at least 2. You're moderately market direction green, you should be looking at long ideas. If you're below 2, 2 of them are red. So right now you can see all of them are green because we're trading above them. Now the short version of these is that this is the opening level right here, this flat line. This is the midpoint of the day. It's the average of the high and the low, and then there's basically a short-term moving average that goes with it. So let's take a look at how the day played out. And the reason I show this, and you're going to hear some sound alerts as this gets near some of the points. Look how we're bouncing off that moving average. This is a very strong market. It's a good day. Volume was decent. It wasn't phenomenal, but it was decent. And early on, you really should have been looking at some long side trades just because of the way that the market never hesitated, never even came back under this short-term moving average. Now, we get in over the lunch hour, which is what you see here. Eventually, you're going to give up. But look how strong this was. This is one of the first days in a long time that we really saw that moving average hold up until really past noon Eastern time, which is deep into the market. And then we got a little pullback, and that's fine over lunch. You can see the one line's red because we're underneath it, but we're still above both the midpoint, which is right here, and the short-term, the opening level, which is way down here. You'd have to break back under the midpoint for market direction to go red. Now, what I want to show you is as they come, and again, these alerts are going off because we're playing with these lines here, and we have a sound alert to let you know when we're breaking and violating these levels. But as you can see here, after lunch, kind of start to head back down, and we hit, look at that, right to the midpoint area. Isn't that amazing? Right on it to the tick and got a little bounce. That's how important that midpoint is. It's a number that most people don't really follow in the market. But this is important because it differentiates the way we look at the market, whether you should be looking at longs or shorts. And it's a close above that, a close below that in this case that would change market direction. And as you can see, even though we slipped under it here, we never closed below it. That's how important that level was. And then from there, we surged all the way back to new highs in the market and closed out the trading day. So at this entire trading day under our tool, you should have only been looking for long ideas. There was never a point where market direction confirmed a flip to the short side. Now let's take that aside for a minute and look at an NTAP call that we made. This is NTAP, and we were looking at this really nice cup pattern over just 2.5 days. This is Tuesday's trade here in the middle, the first few minutes of Wednesday's trade, that was today. We're going to be 9 bars up right here, so you're going to get another sound alert, but it's split between 2 days. I don't worry about those for those who understand what those mean. But if you go back all the way to Monday, here we have this nice flat line, right? So if I just draw that in, for example, right here, that's the breakout point on this play, and we called this for our subscribers in advance, approaching that level. So let me cut that off right there, and let me show you how this ended up playing out. So if I go back to bar replay mode, again, market direction, as you saw, was very strong for the entire first couple hours of the day, and that supports this trade, this very nice cup flat base breakout. So what did it give us? And this is the thing. Look at that nice move right up and out of there. And we had other winners today. We had Amazon. We had a few others. But again, these types of plays, when you've got these really nice basing patterns and the market is showing you really good solid strength and decent volume, this is the days where you really want to get focused and get involved and getting in there for heavy size, play these trades, because there's a lot going on, a lot of potential, and the market's really giving you everything it's got. So we had a good trading day overall, and we had a nice futures winner as well, a nice Forex winner that I'm not going to cover here. But again, that market directional tool is everything. You can see how the market was controlled by it, use that midpoint later on in the day as a support level, and how you should have stayed focused on the long side of the market because of it.